Morning, Steve in Chicago with the morning grain comments. Well, we're never surprised by USDA giving us a surprise, and yesterday they certainly did estimate the U.S. corn and soybean crop higher than expected, which made our corn and soybean carryouts both here, United States, and globally higher than expected. As expected, the market reacted negatively to that. The fund sold 16,000 beans, 8,000 meal, 32,000 contracts of corn, and 11,000 contracts of wheat. We've got now November beans around $9.43 overnight, up a couple of cents. Corn up a penny at $3.71, and wheat's down a penny at $4.67. So if we just take the numbers that the USDA gave us as gospel, it would suggest that nearby corn futures December at least, needs to trade down to $3.40. And November beans need to trade down to $9. The interesting thing about it is that there were some people questioning the methodology of the formula that the USDA used on their August yields. Again, we can't change it, but in the past, what we've seen is the USDA takes objective yields and farmer survey, and there's a tendency for them to use a average ear weight and size, average pod count and pod size, and so in years in which the weather's good, they might lean towards the objective yield survey, which is usually a higher yield. And in years with the weather is bad, they'll lean towards the farmer survey. That's usually below the objective yield survey. One thing I didn't know was that in some years they have a model that plugs in July weather and tries to navigate a yield if the weather is good or bad. And yesterday they didn't use that model. And so if you're a bull and you saw the market collapse and you're hearing this, first of all, you'd like to have confirmation that they changed the model. Secondly, you'd like to know what the yield would be if they plugged in the model, because the weather in July wasn't ideal, especially in a few states in the western Midwest. They'll probably all come out in the wash in the October crop report when they finally get harvest data. But it would be interesting if NASS would give us an answer on whether they used the same formula for the August crop report this time as they did in the past. So right now we're just searching for demand. China was not a good buyer yesterday of beans on the break. We're still wondering where they are. Corn export demand continues to be slow in the United States, and now the funds are estimated to be long 20 beans. They're long 70 corn, and they're actually short 5,000 wheat. So they whittled that position down to a manageable level. But again, if you just take the USDA numbers, we're overpriced. But I doubt the farmer, whether here or South America, is going to be a big seller at these lower prices. Outside markets, still keeping a keen eye on North Korea and see what happens over the weekend. And nowadays, anything can happen. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.